a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Tesla and EV ETFs. So it's been a great year for Tesla so far. The stock has surged. It's up about 65% in 2023 after falling almost as much last year. Particularly after Musk's purchase of Twitter, there were concerns about him being distracted and also massive sales of Tesla stock by Musk. So that's why Tesla had a terrible year. Now, this year, many investors are buying those beaten down stocks, and the stock was up almost 33% last week. And that was its best weekly performance since 2013. That is according to CNBC. And that was mainly because Tesla reported better than expected results. And CEO Musk made very optimistic comments on the conference calls. He was positive about the market outlook, and he said that the company could produce about 2 million cars this year. Now, earlier this month, Tesla had announced some price cuts, which would help more of its cars to qualify for federal EV tax credits and may help sales further. And today, Ford Motors announced the price of its electric Mustang Mach-E by an average of $4,500. So we are seeing this price wars in the EV space. So that is going to maybe increase demand and sales, but it would erode profit margins. Now, as far as the market is concerned, Tesla accounts for about 65% of US EV sales, and it is decades ahead of any other competitors. Other competitors are way behind. And Tesla is a profitable company. They have a nice profit margin, whereas other EV companies like Rivian, Lucid Motors, they will not turn profitable anytime soon. So price wars may help Tesla, but the others are going to suffer due to these price wars. So Tesla's excellent week also pulled up the shares of other electric vehicle makers. Now, one luxury electric vehicle maker, Lucid Motors, surged in particular due to some rumors that Saudi Arabia Public Investment Fund, which is already an investor in Lucid. So there were rumors that they would acquire the company. So that is the reason why Lucid shares went insane. Now, on the next slide, I take a look at EV market and how these stocks are going to benefit from the recent two acts. So the Inflation Reduction Act and the Infrastructure Investment and Jobs Act. These two acts are directing billions of dollars to EV-related mining, battery production, EV charging stations and other infrastructure, and also car production. And that may help sales of EV. EV adoption is going to rise. And annual EV sales are expected to go up from about 10 million in 2022 to more than 20 million by 2025 and more than 60 million by 2035. And that is according to Motion, which is an EV and battery research and consulting firm. So let's take a look at 3 EV ETFs. So the first one is by GlobalX, DRIV, DRIV. It holds companies which are involved in autonomous and EV vehicle And these ETFs invest in the entire chain of entire EV chain. This is one of the oldest products and has 882 million in assets currently, charges 68 basis points. If you want to learn more, you can go to the quote page on Zacks.com. Using the link, you can go to GlobalX web page. GlobalX has some good research also on EVs. You can read that, look at the top holdings: NVIDIA, Apple, Qualcomm, Microsoft, Toyota Motors. These are the top holdings in this ETF. Now you will see that all these three ETFs have a lot of international exposure. In case of this GlobalX product, 54% US and rest is international. So be prepared for volatility if you invest in these ETFs, because we know that international stocks, sorry, particularly Chinese stocks, are much more volatile. The second one we are talking about is one of the cheapest in this space, has an expense ratio of 47 basis points, 464 million in assets. It focuses on self-driving and EV innovation companies. iShares, you can go to iShares webpage using our link on our quote page and see what this ETF holds. So you will see slightly different top holdings. Lucid has surged to one of the top holdings because of the insane surge in the stock last week. And this ETF, IDRV, has about 35% US stocks, and the rest is international. So you get even more international exposure, and you will see that all these companies, a lot of them are international companies in this ETF. The third one is by Crane Shares. The ticker symbol is CARS. It also invests in EV and future mobility companies, 70 basis points expense ratio, and 206 million in assets. Crane Shares also has some good research, which you can read, look at the holdings. So this has the largest international exposure. So this is just about 21% US and rest is international. But you do see some popular companies, Samsung, which is South Korean companies. Then you see Tesla, Albemarle, which is a lithium producer in this ETF. But be prepared for more volatility. On the next slide, I have the year-to-date performance. So Tesla is up about 65%. S&P 500 index is up little more than 5%. The three ETFs are up around 21%. Then I have this performance chart over the past 12 months. So you will see that despite this year's surge, Tesla is still down about 36% in the past 12 months. And the S&P index was down about 5%, and these ETFs were down between 10 and 15%. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our videos so that you do not miss anything. I'll see you next week.